All right, let's pull back the curtain on the world of trading. Today, we're going to dive deep into those common strategies you see plastered all over the internet, and we're going to expose exactly why, for most people, they just don't work.
It's the big question that hangs over this entire industry. Why do so many bright, motivated people jump into trading only to lose their hard-earned money? Well, the answer isn't really about bad luck. It's about not understanding who's on the field with you and what game they're really playing.
So to get this, you first got to understand that there are three types of players on the field. The market isn't just one big chaotic mess. It's actually a pretty structured game with three very different kinds of players. And trust me, they are not all playing by the same rules.
So let's meet our players. First up, you've got smart money. Think of these as the giants, the central banks, the huge institutions. These are the guys with the trillions of dollars needed to actually move the market. Then you have the professional traders. These are the people who really get the mechanics of how things work. And finally, there are the retail traders. That's most of us, right? The crowd, often using the very concepts we're about to break down.
And when you look at how this breaks down, it's pretty eye-opening. Smart money is calling the shots, controlling the vast majority of the market. And the retail traders, well, we're called the uninformed crowd for a reason. Our strategies are so predictable that our money often becomes the fuel for the market. The whole point of this explainer is to help you shift your mindset from a retail trader to a professional one.
So, with that in mind, let's crack open the retail playbook. You know, the one they hand out for free all over the internet. We're going to go through it, chapter by chapter, and see exactly why these strategies make you predictable and ultimately easy to take advantage of.
And that right there, that's the whole problem in a nutshell. The trading education that's easiest to find isn't free because it's good advice. It's free because it teaches you a set of rules that benefit the market makers, not you. It creates predictable behavior.
Okay, chapter 1 of the playbook. I call this one the trap of simple lines. This is where pretty much everyone starts out. The idea that you can predict this massive, complex, multi-trillion-dollar market just by drawing a couple of lines on a chart.
So, here's the basic idea of support and resistance. You see the price bounce off a certain point a couple of times, you draw a line. The top one is resistance, the bottom one is support. The strategy? Simple. Buy at the bottom, sell at the top. But it completely skips over the most important question. Why did the price turn there in the first place?
And for so many traders, this is it. This is the entire strategy. The price gets near a line that was drawn in the past, and that's the signal. There's no thinking about what's actually driving the price, who's buying, who's selling, none of it. It's just reacting to a line. Okay, so what happens when one of these lines finally breaks? Oh, don't worry, the playbook's got an answer for that too. It's called the breakout and retest. And the theory here is that the old resistance line magically becomes the new support line.
And here's why this is such a perfect trap. This sequence is incredibly predictable. A level breaks, and a whole crowd of retail traders waits for the price to come back to that exact same line to place their buy orders. What does that create? A giant juicy pool of orders all sitting in one obvious place. A perfect target for smart money.
And to finish off this chapter on lines, we have trend lines. It's, you guessed it, the exact same idea as support and resistance, just tilted. You connect two dots, draw a line, and the playbook tells you to trade on the third touch. I mean, you gotta ask yourself, why the third touch? Is there some law of physics I missed? Or is it just another arbitrary rule that makes everyone act the same way?
All right, on to chapter 2, patterns, signals, and noise. If chapter 1 was about drawing lines, this next section is all about memorizing shapes and following signals, basically doing everything except trying to understand how the market actually works.
You've definitely seen these before. It's like they want you to trade by playing a game of match the shape. You're supposed to memorize all these patterns, double tops, head and shoulders, falling wedges, and then try to spot these little drawings in a live, chaotic, and ridiculously complex market.
And that's the question you just have to stop and ask yourself. I mean, really, do you honestly think the huge institutions moving trillions of dollars are making their decisions based on whether the price chart kind of looks like a triangle? No, of course not. They are playing a completely different game.
And then we've got indicators. These are just little programs that look at what the price has already done and then spit out a buy or sell signal. The key word there is already. By their very nature, they are lagging. They're telling you about the past. And trying to trade the future by looking in the rearview mirror, well, that's a recipe for disaster.
So let's just boil this all down, right? The entire retail playbook is built on some really shaky ideas.
Support and resistance is based on the hope that the past will just magically repeat itself. Chart patterns assume the market cares about drawings from a textbook, and indicators assume that a math problem based on old data can somehow predict the future. Every single one is a shortcut to avoid doing the real work.
So, if that whole playbook is basically a trap, how in the world do you escape it? Well, it all comes down to adopting a professional's perspective. It means you stop asking what is happening and you start asking why it's happening.
Look, this right here, this is probably the most important shift you can make. The retail trader sees the price touch a line and says, okay, buy signal. The professional trader asks, wait, why is the price reacting here? Where are the buy and sell orders piling up? The retail trader spots a pattern. The professional asks, what kind of manipulation is causing this pattern to form in order to trap other traders? See the difference? It's a total shift from looking at the effect to understanding the cause.
So the professional's edge isn't some secret indicator they bought online. It's a deep, fundamental understanding. They learn the real mechanics of the market. They use that retail playbook we just went through not to trade it, but to figure out where the crowd is about to get trapped. They treat trading like a serious profession that requires learning, not a lottery ticket. And above all, they focus on figuring out what the smart money is trying to do.
So I'm going to leave you with this question. The next time you open up a chart and you see a perfect, clean-looking trend line or a textbook pattern that looks too good to be true, are you going to see an opportunity or are you going to see a carefully laid trap? Because knowing the playbook is the first step to finally stop playing someone else's game.